GKFX Prime presents the Market Analysis Webinar.
Hello everybody, Happy New Year. Welcome to another weekly webinar. Of course the webinars will be resuming as per normal now that we're in 2021, and we've started with an explosion. Cryptocurrencies, specifically you can see Ether, the token of Ethereum, has flown high. It gapped massively, hit 1150, now crashing back down again to sub 1000. Similar price action happening in Bitcoin, so we're going to cover all of that. That's probably the biggest movers today, but generally a risk on mode and an interesting start to markets in 2021. So without further ado, let's dig into this price action a little bit more. So this really to me is the definition of going parabolic. If we look at our daily chart here, you see the trend is steadily moving up. Then you see a bit of an acceleration of the trend where we break above this high. We start respecting a steeper trend line here, and then as of this weekend we've just gone absolutely parabolic. We've just shot straight higher. And what was interesting, I was wondering why we stopped at 1150. This was not a price point that I necessarily had on my chart before, but clearly that's where we've reversed from, for now at least. Not to say that even by the end of today we couldn't be higher again. The volatility is such that clearly the trend is higher and the momentum is strong, so lots of opportunities in this one, but certainly volatile. Certainly got to be pretty careful with your stop losses given how fast this price is moving. But if I do turn off these indicators here and I scroll back, you can actually see that this 1150 was a level where the price paused in its original record high, its original moves up to record highs in late 2017, rallied up, put those two tops in, and you can see that it was kind of the 1150. You could argue it was down at 1100, where the price was sort of trying to respect it. It eventually crashed through, then it kind of gapped back above it, and then came down, and then the last test of any attempt to move to the upside, after that big crash, and it was it was a two-day dip. The price tried to rally up, couldn't get through 1150, and finally kind of crashed, and we know the rest from there. It absolutely nosedived. So 1150 has some historical significance. You could say equally just the 1100 level, and even 1050 I guess was kind of a zone that the price sort of working with in terms of what was being respected in this previous price action. So that could be a guidepost for how to think about whether we can get if we can get even back to above 1050. That might be an indication that we can still make higher prices here. But I mean, this certainly looks like exhaustion price action, and I'll do a bit more detailed analysis on Bitcoin, which obviously has similar drivers. So let's get out of this for now. I'll switch gears to the normal format of going through the major Forex pairs and commodities, and then I'll touch on Bitcoin and the S&P 500 just towards the end there. Right, looking at the euro, this has been interesting. So we had a bit of a sharp sell-off, lost around 100 pips or so from highs above 123, dipped down towards 122, but we've pretty much made up all that lost ground again. So you can see there was a trend line that the price has been respecting here. Also happened to be the 50 period moving average on this 4-hour chart, which has somewhat been defining the price action with a little bit of leeway in this latest trend. It's a kind of steady trend here. It's like, and you can kind of see this in some pairs more than others. The Aussie is a bit of a faster uptrend at the moment, but it's kind of a slow burn downtrend in the US dollar here. Just a continuing downtrend that just can't seem to get a foothold and make some kind of base. So this is our daily chart, and you can see that we're still respecting this kind of longer term trend line, and you can kind of see that we kind of held on to 121, we got up through 122, dipped, held 121.50, ran up to 123, and we're basically meandering higher. And again, it's all in the context of our our longer term breakouts that we've been anticipating, and Now, we've been talking about this move higher since we were down, down at 117. We're now at 123, 500 pips later. Now a retest of 125, which is only 200 pips away, looks like more likely than not. It's only 200 pips away, and it's in the direction of the trend. So solid uptrend still in place in the euro. Like I said, a slow burn uptrend in the euro. Nothing really, a slow burn downtrend in the dollar. And would basically just need some very severe risk-off event to get the dollar back in action again. I think it's just its necessity as a safe haven really not there while we see this kind of wild price action, like record highs in the stock market and record highs in Bitcoin, etc. So how to play this? Well, I think we already had our dip. We're going to work on the assumption that we take out 123, and if this uptrend is resuming past 123, then we're buying into dips towards 123. Would be my kind of default. And if we are looking for some evidence of trend reversal, well, we've actually got two converging trend lines here alongside the 122 level. So a break below this area would be not necessarily a full trend reversal signal, but it would be certainly a sign that the current uptrend has weakened and we could be due a bigger pullback. So moving swiftly on to the British pound, I mean, this is obviously the biggest one in terms of Forex news that we have now. As of a few hours ago, a day or so ago, the UK Parliament approved the Brexit deal. The EU countries had already agreed to the Brexit deal. So Brexit trade deal is done and dusted, and now the UK is out of the EU with a deal, and it removes a lot of the uncertainty around the British pound. Now, of course, there is lots of minute details about this deal in terms of what it would mean for British industry and the economy moving forward, but I think just merely the fact that we've avoided a kind of no-deal crash out, as some people referring to it, basically trading on WTO rules. As long as we've avoided that, I think this breakout that we've been talking about for a while, this move above 134, seems to have legs. You can see there's been a couple of attempts on a weekly candlestick chart to try and take us down. Big sell-off down there, closed above it, big sell-off into the zone, rallied up through it, and now it looks to me like we're making moves up towards prior resistance, which comes in around 144, I believe. Yeah, just shy of 144, 143 if you're being a little bit more cautious. But I mean, that is still 600 plus pips from here. Of course, it's unlikely to be a straight line, but it looks like we've broken out above a significant level. And again, we kind of know when to revise our opinion here. We know when we're potentially wrong on this big breakout is if the price starts moving back below 135, below 134, then our kind of breakout idea is obviously null and void. Okay, moving over to the dollar yen, and I keep joking about how I'm looking for a reversal in this and it just doesn't happen. I think I was a little bit more circumspect in our final webinar of 2020. I did say, well, actually we just need to be expecting this downtrend to continue until we have some significant sign otherwise, and we were clearly making lower lows here, and it looks like this downsloping channel is being respected, and if that's the case, we expect to move down towards probably below 102 to actually test the bottom side of this channel, and not far below is the lows that we challenged in early 2020 during the big sell-off. And so it almost seems more likely now that we get a sudden panic sell-off, because this has been very steady selling in dollar yen for a while now. Maybe we even get a blow down kind of bottom before we actually turn into some kind of more sideways action, because this downtrend, again, same idea, that this dollar downtrend has just been a kind of slow burn, unrelenting downtrend. On the shorter term price action, you can kind of see what's been going on. We had our levels there. We spiked above it a couple of times. That formed a new resistance, and then finally a third time we weren't able to do it, and we had our confirmation with a move back down through that major level, broke this little short-term trend line, and we've been trending down ever since, taking out the low. So you don't probably want to be selling right at the lows unless it's a very short-term momentum-based trade, but you want to look for some kind of rebound towards 103, and ideally the price needs to hold below 103 for this downtrend, this break of the lows, to kind of keep its downward momentum in place. So switching gears to the Aussie, I mentioned there was a bit more of a bit more upside, a bit more acceleration in the Aussie. I think that's in part because of the good feelings about what's happening in China, mostly less so than what's actually specifically going on in Australia. Actually, the trade relations between China and Australia continues to deteriorate, but Australia just kind of reflecting that global reflation China improvement story. It's notable that the Aussie dollar even seemed to pick up some steam on stories of China being able to celebrate the new year better than in other places of the world where it's locked down. So you can see the kind of big breakout that we've been referencing for a while here through 174. We're up through above 0.74. We're above 0.77 now. And really the big target, as we've said all along, is really through those old highs up here. If we zoom out our weekly chart a bit, there's nothing really particularly to stop us from, there's never is, but in terms of immediate technical resistance, you can see that 0.77 to 0.8 was these highs through here. That could block us for a while. Maybe we get some little pullback opportunity. That would actually be quite good because we're a bit overstretched in the trend now. But it does seem like the ultimate destination is to test these previous peaks up here. So moving over to oil prices, and we've just had a small tag of 50 in WTI, I believe. If we get down to our daily chart, just shy of it on a spot basis. I believe futures, oil futures have tagged 50, WTI has tagged 50, Brent's above 53, pulling back a little bit now. This could be some short-term top if we can't get through here, but no particular evidence of it yet. Just that obviously this daily candlestick hasn't closed. We're in an uptrend. But if we do get some strong reversal from the previous peak, maybe there's a little short-term counter trend trade off available. You can kind of see through our 4-hour chart here, there's like a bit of an attempt at a reversal. Nothing really confirmed yet. Two strong bearish wicks on these latest two candles, but again, this one's not even closed. We have had a slight filling of this gap. So potentially a little short-term top in there, but overall, we're looking bullish on the trade. We've just got to remember the kind of longer term context is we are expecting maybe somewhere around this 50 level. I would have thought probably a little bit above, like a push through 150, a push through 50 on WTI, and then a reversal would be an interesting trade setup to the short side. Now the trend to me is generally up, but you can see on a kind of long-term basis still we are a little bit negative oil. And so if there is some this previous area of support, if it now acts as resistance with a strong reversal signal, I would probably look for the reversal signal to take place on a weekly basis here, because this is a bit of a long-term setup. So look for a kind of push through, something like one of these kind of candles, a push up through on a weekly basis, or indeed a kind of close up and then a big close down. Of course, you missed that first bit of price action, but it's confirmation, and then you have many short-term trades to ride any kind of potential drop back down. Not that it's necessarily going to be that big, but just because you missed that first weekly candle, it's not to say there's not many hourly, 4-hourly, daily setups you can't get after that. Now that you have a lot more confidence that the bearish trend is in place. So let's see if something like that happens. If it doesn't, if we get a clean close above 50. Well, then it's obviously a positive thing for oil. And I've just drawn this down sloping trend line in. It's only got 2 points, may get a third point, but probably the major level is obviously these previous peaks up here. which is pretty much $65 a barrel in WTI. Right, moving swiftly on to Bitcoin. And wow, even in the time that I've been speaking, we've completely wiped out that that weekend gap. So as of Friday, I believe it was 29,000. We're back at 29,100 now. On Saturday we broke the 30k mark, and then by Sunday it was up at 34,000, and you can see that's the kind of roughly the peak we've got on the chart here. I don't think it, according to our prices we even tagged 33,500, and the price has subsequently reversed big time. This, what I've got drawn on the chart here, I mean, this is just again an example of kind of the price exploding higher. And what you see is that on previous occasions in this last rally, really since the end of November, when the price has really taken off, remember down in basically we're say we're early January now, so we're just talking about the month of December. Basically we've gone from 18,000 and doubled up to 35,000. So pretty amazing price action for 1 month. And one thing that's been characteristic throughout has been these weekend gaps. So here the price opens up, price rallies up, comes up and tests it and probes into the gap, but never quite closes it. So say the gap is a two candles, just to clarify, two candlesticks where neither is touching. This candlestick closed here, this candlestick opened up here with a gap in between, and you can see that in the previous price action that gap has acted as support. Another weekend gap up, and then didn't even touch into the gap, traded very mildly, then exploded to the upside, sideways again, massive weekend gap, traded sideways, didn't go into the gap, moved higher, exploded higher in the weekend gap again. This time it's filled the gap. So not to say that we're about to crash in Bitcoin prices or indeed other cryptocurrency prices, but keep in mind we've had a big move higher and we've just filled an exhaustion gap. That is a potential bearish setup right here. Now things don't happen in a straight line. They do more so in Bitcoin than other markets, but I'm sure there will be buyers of this dip. So if we get back up to the highs, having filled this gap, there might be enough evidence, if the risk reward is suitable, to try and actually trade a counter trend trade here. Now keep in mind, if you are going counter trend on these cryptos, there is such strong momentum in them at the moment. But we're not investors, we're traders, and we've got a potential short signal here. So let's see how this rebound pans out. Clearly, if we fly straight through the highs and keep going, then don't try and sit on top of a rocket. Don't try and stop something flying into space. Go with the price action. At the moment, the price action seems to be signaling a bit of a reversal. So let's see if we can somehow take advantage of that with the lowest risk, highest potential reward setup that we can. Somewhere within this, the upper range of this gap, I would suggest, is an opportunity. And last but not least, let's look at the stock market. Let's look at the S&P 500. This is our short-term price action. So you can see that what's interesting here is we've got some bearish divergence. RSI has been going very flat. We've actually peaked above it to hit an oversold 70 level, just as I'm speaking here in futures. But the price has been rising. So this is again, it's a bearish signal in an uptrend. So you have to decide whether it fits your trading strategy to go counter trend. I have to say it's something I've learnt not to do over the years, is try and sell at the highs, but rather wait for some sort of confirmation, which generally means losing out on the first move, but feeling a bit more confident about riding the second and third moves lower. So we're in a bull trend at the moment. At the moment that bull trend's capped by this rising trend line. Maybe we can go up. We're at 37,080 roughly now, so maybe we can pop another 20, tag 3,800, maybe that can be a little interim top, and this bearish diversion starts to play out. It's a rather overextended uptrend, and you'd imagine that if Bitcoin is selling off and there's a big risk-off move there, and they're not necessarily that correlated, but if there is a big kind of generally risk-off move, that would be sort of risk-off for Bitcoin, risk-off for stocks, probably risk-off for gold, and positive for the dollar. Currently, the trend is obviously the other way around. Right, thank you everyone. Hope that was useful. Good luck trading in the new year. Thanks very much for watching. See you at the same time next week.